Welcome to another recorded video for Lions and Tigers. What you were asked to do this week was to assume a perpetual inventory system with an average cost flow and record the transactions. Now I went ahead and gave you that average cost because we hadn't learned how to do that yet, so please just follow along. On the first entry, you purchased 10 leashes for cash of $5. So the first thing that you need to do is record that cash entry or that purchase. So on January 3rd, you're going to debit inventory, and you paid cash, so you're going to credit cash, and that's 10 leashes at $5 each, or a total of $50. So you're going to debit inventory for $50 and you're going to credit cash for $50. On January 8th, you sold leashes for $12 in cash. I'm sorry, on January 5th, you sold 8 leashes. We are going to debit cash because we received cash of $96. That's $12 for 8 leashes. And we're going to record sales of $96. When we sell inventory, we have 2 entries under a perpetual system. The first entry recognizes the sale. The second entry recognizes the cost. We sold these leashes. We sold 8 of them, and we paid $5 each for them. So 8 times 5 is 40. So our cost of goods sold is 40, and then we need to reduce our inventory for that same 40. Because we don't have that inventory anymore. Okay, so now we're going to go through this process multiple times. Now on January 10th, I purchased some more inventory, so I'm going to debit inventory, and this time I bought it on account, so I'm going to credit accounts payable. I purchased 12 leashes at $6 each, or $72. Now I'm going to sell some leashes. Now I'm going to sell 6 leashes on account. So on the 15th, I don't get cash, but I do have accounts receivable. My customers owe me that amount of money. So 12 times 6 is 72 is how much I sold them for. And I have sales of 72. But now we need to record the cost. Now I told you in the problem that they had an average cost of $6 or $5.857. So the cost was $5.85.7. So I debit my cost of goods sold, I credit my inventory, and I'm going to take 6 times 5.857, and I'm going to get $35.14 is how much my cost and reduction in inventory is. Now that you're starting to get the idea of it, if you didn't have it before, pause the video, fill in what you know, and then come back and see if you got it right. On January 22nd, I purchased more inventory. This time I purchased 15 leashes at $7 each, or a total of $105. And I sold, or I purchased those on account. So this would be accounts payable of $105. Okay? So you got to be really careful that you read what it's telling you. And then when I sold my 9 leashes, I sold them on account. So on January 28th, I sold 9 leashes. So accounts receivable, 9 at $12 each, or a total of $108. And I have sales of $108. In the problem, I told you the cost was $6.60.02. So we're going to say cost of goods sold, 9 at 6.602, or $59.42, and inventory reduction of $59 $59.42. So what this is showing me is the cost was $59.42. I sold it for $108. The difference between the two would be gross profit. Please let me know if you have any questions via the discussion board.